Thank you so much for joining in. Thank you so much for joining in. Yes, 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 yes. Well. I like it. I like it. I like it. Today is going to be really, really, really interesting. Thank you so much for joining in, guys. Appreciate all the guys checking in on YouTube. Really do appreciate you. All right, there we go. There we go. Today, I'm going to end off January on a high note. Ending January on a high note. So far, we have been speaking throughout January. We have been talking about finances. We've been speaking about how to get your finances in order. We have been speaking about how to ensure that you save and invest your money, how to be more financially independent, how to be more financially focused, and how to have financial intelligence. So just to cap the month off, because next month on all of my platforms, I will be speaking about love, relationships, and marriages. So that is going to be the focus for next month. But for this month to finish January off, I'll be finishing off, and I have two guests that will be coming in, and they will be speaking about investments, stocks, what's the difference between investments and saving, and what's best for you to build wealth and financial independence. All right. So, we're going to be having an interesting conversation today. All right. So, without any further ado, I am going to invite my first guest in. And definitely for the guys who are watching on YouTube, for all the guys watching on YouTube, if you wish to make a comment, just drop it in the comment section, and I will be more than happy to have them addressed in the presentation. So, without further ado, I am going to get to my first guest. Name is Mr. Delon Maxwell. He is well known in our circles to be really, really one of the go-to persons to speak on investments and the stock market and basically anything financial, how to get yourself on the right track. Because 2021 and 2020 taught us that if you do not have that secondary source of income, if you do not have financial knowledge, you may have challenges going further. So, for all the people who had a really tough 2021, you can start off 2022 on a positive note. And this is my gift to you. I'm going to give you some knowledge, some information that you can take with you and make your finances a bit better starting in 2022. All right. I am going to add Mr. Maxwell. Welcome, sir.
Yeah, man. Welcome, and actually happy to be on the platform, And
One.
I have to say, actually, I give me too much credit, in terms of being knowledgeable and taking it.
Well, I mean, there are levels to it, man. There are levels. I mean, from my level, I would consider you as one of the go-to persons. So
Yeah,
for persons who may not be on it, so it's just based on the level that you're at and where you want to be. Because
yeah,
I
man.
want to I want to get to your level, and obviously you would like to get to another level,
Yeah,
you
indeed.
know. So that's basically where we are right now. So, Mr. Maxwell, you wanna give us some preliminary information? I notice I see another one of my guests coming in here. I am going to add him. I think that this would be Jason, so most definitely would also like to have his feedback on the information. So I have now completed my list of panelists. Let me go ahead and add Jason to the stream. Welcome, Jason. How are you doing, sir?
Afternoon, afternoon. Not so bad, you know. You may hear a little bit of background noise based on where I am, but hopefully you guys are hearing me clearly.
Yeah, man, definitely.
All right, cool.
All right, and Jillian, I also see you in the chat. I definitely know you may have some questions because you are one of the persons who have been so excited to be part of the platform. So for that reason, I'm definitely gonna have you add you up so you can put your question in there. I see Dylan looking all over the place. All right, so I'm gonna add you as well, Jillian, so you can pose your questions right here on the live platform. Welcome,
Okay,
Jillian.
thank you.
All
Welcome.
right, great. So I am going to start off by allowing Mr. Maxwell to go ahead and, start us off and give us our information that we are here for. So,
Yeah, man. So, yeah, name is Dylan Maxwell. Uh, I've been investing since 2015, and I've learned a lot. Made some mistakes, learned from my mistakes. I've learned from others, and happy to share some knowledge or the knowledge that I have as best as possible. Make sure I say simple, and hopefully it would be able to give persons the some amount of know-how on how to go about investing. Not even that far, but some basic concepts and to see the bigger picture in regards to investing and what you can do.
all right, wonderful, wonderful. So, how has investing been for you? And I mean, since you said you mentioned that you have been doing this since 2015, you said?
Yeah,
20,
boy.
2015?
All right. So I'm gonna know if persons have seen the movie before. Um, called The Founder. Talks about the life story of the founder and also the owner of McDonald's. And there was a scene in the movie where it was playing a recording, right? And it was talking about persistence, right? And they were saying nothing in the world can take the place of persistence, neither talent, geniuses, or education, right? And my persistence paid off, man. Because if I had decided to give up, maybe at the worst of times, then I probably wouldn't have been where I am right now.
Wonderful, wonderful, wonderful. And I know you have a presentation for us. So,
Yeah, man. So let me share screen, and I hope the all right. So it's showing stop share screen, so that means that the presentation is up. Let me
all right,
know, Damien, if you're able to
all
see
right,
my slide.
all right, great. That should be you.
All right. So just to confirm, everyone is able to see the slide. You're able to see it, right, Damien?
Yes, I'm seeing it.
All right. Good. So um, I'm gonna be honest. I finished this presentation about a couple hours ago. So a lot of consideration and thought has been put into it. And one of the most important thing I want to state before going further is trust but verify. That is important because things are going to be said here that may not that might make you uncomfortable or you've never heard of before. At the same time, you should also take it upon yourself to try to verify some of the information that is being said here for your peace of mind. All right, and this is a quote from U.S. President Ronald Reagan, right? So, before I delve into the presentation, I want to actually make a disclaimer, and I'm going to start. All right. So,
All right. Are you okay?
You're able to see it?
Yes, yes.
All right. So whether we like it or not, people, money makes the world go around, right? And if you don't want to make it about money, someone else will, and it will eventually affect you. So I have four quotes that I would like to share, and I would like for you to, even if you get a pen and a paper, write them down and try to take them in, right? Because some of them will come back further down in the presentation, right? So let's go.
Okay.
Hold on. Let me check something. Hold on. Hold on. You know, so let me try back with the slideshow one more time. Because a while ago the animation didn't work good. Not true. David.
Yeah, it was working perfectly before. See, it's coming up now.
Yeah, if it doesn't come up as intended, I might have to just go ahead and just end the animation.
All right, fine, fine.
Yeah, one of the tech should have been here right now. But we have to improvise, so let me just. All right. The music won't stop, but at the same time, these are the four quotes, all right, that I want everyone to read, consider, even write them down because they will come up or there might be some sort of reference. I might say, oh, them play out further down in the presentation, all right?
Yes, yes.
All right. So I'm going to let this play for about maybe another 30, 40 seconds.
All right. Okay, there we go.
All right. So let's move on now. So after this presentation, you should understand saving and savings, what is investing, the difference between saving and investing, what are the benefits of investing over saving, and how to start investing on the Jamaica Stock Exchange. All right. So I have this personal concept that I think, that in my opinion, I believe it is the formula for wealth creation, and I'm going to show it to everyone. Earn, save, invest. Formula for wealth creation: wash, rinse, and repeat. Right? And it should be straightforward and pretty simple. But if there's anyone out there that would need some help with understanding, sure, no problem. So whether we like it or not, we work so we can earn our income, right? I receive a salary, and from that you take care of your expenses and your obligations, right?
True.
So, so if money is left over after taking care of some or all the obligation and expenses, what you have left is called savings, right? Remember, so just to say it again, get your pay, you take care of some or all the expenses and obligations. You have money left aside you're not planning to use right now. That is called savings. See? Now, when you set aside that savings and decide, say, oh, boom, we go use that money there next week, next month, pay soon, right? The fact that you're not using it now and put it aside for some future use, that is called saving, right? Saving without that S on it. The money that you've set aside doesn't have to be in a savings account to be considered savings. I mean, also enough how we can relate to that. it's a granny, maybe an auntie man in the country, them have a like a whole tin pan, one chocolate tin pan, them have a shoes box, them have a hole in the wall, them have a little drawer where you know, so them put all of them funds in, and put it somewhere, say, yo, only you alone can access it. And even sometimes you put it in a place where say, yo, it's hard to reach it because you don't want to touch it. So the fact that you're doing that, that is called savings. And you don't really need a bank account to do that. Right?
Okay. So what you're saying is
Mm-hmm.
just for clarity, you're saying there is a difference between saving versus savings.
Correct.
Okay.
Yeah.
So saving is more what is left over after you've taken care of your expenses and obligations.
That would be savings.
Okay, fine. But
Yeah.
when you put it down for a more, let's say in a savings account, then it is savings with the S.
Yeah.
Okay, great.
Oh, sorry. Let me clarify. When I put in the savings account, it is savings. But when time I put it aside, you use it sometime in the future, it's called saving.
Okay, all right,
Yeah.
wonderful.
Yeah,
Yeah,
man.
man.
Hence the name saving.
Sorry for
Go ahead,
interrupting,
yeah.
but yeah, let me chime in there. So I'll share an example. My salary, I view my salary as a working income. Because a working income is very important. So what Dylan is explaining, this is saving. I only do that for a specific reason. Everything else is invested. For example, my car insurance for the year, I divide that by 12. And I make sure say each month that is saved. That's a saving because you're saving towards a specific thing, you know, your tuition, your child's school fee, whatever it is. When you do that math and you say, okay, each fortnight or each month, I need to ensure that I save this amount. So when the year comes to pay the car insurance or when the 3 month come to pay the school fee, that is what you term as saving without the S because you're saving to meet a specific target. Now,
Mm-hmm.
savings with the S is what you have in your bank account after doing everything. That's the one I don't have because I invest that, you know. So
Yeah.
saving without the S is when you want to meet a particular target. You want to buy the bag, you want to buy the PlayStation, you want to buy the car. You know, so you need to
Yeah.
put this aside each month. You're saving towards that. But if you have money put on in a bank account, we're not do nothing for you. That's savings, you know.
All
So
right.
just to
All
clarify.
right, all right.
Yeah, man, respect this. No, let's move on to the meat of the matter, which is what is investing. And as seen there on the slide, you have expectation versus reality. So in our society, which is quite unique, of course, we have a very warped expectation of what investing is, right? To the point where it's even vilified. But investing, for most people, them feel that's something hard and difficult, and a certain people with skin color must do it, you know, and certain people can afford it. You have to have a bag of money. But in truth and in fact, investing is quite easy, as 1, 2, 3, as you see over there with puppet from Sesame Street, the count.
The
So
count.
yes, man. So let me move on to the next slide where I'll give a general definition of what investing is, right? And the general definition is to commit resources for some future benefit. That's a general definition, right? And you'll see a chart, a diagram there. It shows the why, which is the future benefit, which is why you're doing it. How, Zaid, you'll be using investing. An example of the why would be for a new car, a new house, school fee, retirement, right? And what you need to do to get to that is to commit that money through investing, right? And not only that, investing is done in different ways. Like for example, you go down a BS, hand cart man, and the man have him goods on him cart, and he must sell them. That is investing, because if I know him or somebody else, and take up their money and buy some goods, but they know so they must sell it for a return because there's some future benefit they want out of that. You get my try, sir. Cool?
Yeah, definitely.
Yeah. So we're gonna move on to the finance definition, which is more nuanced, right? So the finance definition is to commit a certain amount of money or a certain amount of time with the expectation of a return or a profit, right? And that is important when you're investing. You need to know what is your goal when you're investing in terms of your returns and how long, right? And I'll delve further into that when time proceeding at the slide. Since we're speaking about investing, it is important that I speak about what this is, right? One more thing, what is risk? So with investing, our return or profit is not guaranteed. Risk is what you can lose, and it's a part of the game. So the more you can gain when you're investing, the more risk you will get exposed to. And the next slide will explain that. When people hear about risk and investing, it's like it's a turn off for them. It's like they must say, boy, but I want to try it, because I don't want to lose all of my money. They always go to the extreme. I don't want to lose all of my money. Right? They always go to the exception. Right? So I don't want
Okay.
all of my money. I don't want to invest. Be free light. I prefer take my money and put it in my trash.
But just a second, Dylan. Would you say that the culture of investing is something that is basically new for Jamaica, or is it something that you would have possibly years ago? The culture has been coming around to investing, or is it still relatively new?
I would. Well, it depends on who or which part of society those persons come from, because people in high society have been doing it for quite some time now. You know, in terms of stock market investing. However, one and two people who are ordinary Jamaicans have been doing it for maybe all right. So I would be speculating about that, but in terms of how long ordinary Jamaicans have been doing it, but this amount of intrigue and interest has been around in regards to investing, in my opinion, ever. Cool.
I can chime in on that one. I think the generation is changing.
Mhm.
Because of social media. What used to happen, is, as what Dylan says, the big wigs investing was for them because well, as a matter of fact, they don't teach us none of these things in school. So what you find is that
Mhm.
corporate people were the ones who mostly benefit from this because of their exposure. They knew about investing. They're around persons who invested. They are open to a lot of things, so they are able to take advantage of that. For the regular, 9 to 5ers like myself and so forth, before social
Mhm.
media and all of these things blow, we may have heard about it, but we had no clue what it was about. It sounded like something that you need millions to do. And because we just never had the understanding of it, it's just something people just did not get into. And then, especially because you would hear most people talk about the risk and losing your money, but no one really thought about the wins. But I see a big shift in the generation now because there are so many younger Jamaicans now who are getting involved, in investing, in trading, in crypto, in all of that. So I think even this program that you're doing is very good because I started like 3 years ago, and the results have been tremendous. Dylan can tell you whenever, I'm not a numbers person, and whenever a balance sheet come up and me need to make some decision to invest, Dylan are the first person me link and say, brother, break this down for me because, and one of the
Yeah.
things I want to say is, you see, unless we change how we think and we change what we consume, we won't benefit. And I'll just share a quick example and then I'll hand over back to Dylan. Sometimes when I do my financial freedom courses with persons, I'll ask persons who want to be rich. They put up their hand. But me say, why be rich and not wealthy? Some people not even understand the difference. Because if you have $1,000 now, you get $2,000 now, you're rich, you're $2,000 richer. But what investing does, or if you understand the principles of investing, it helps you to create wealth. That's what I say, and that's where I want everyone listening today to think, not to get rich, but to create wealth. To create wealth and create generational wealth at that. And investing is just one of the streams that you can use to do that.
Yes, yes. And just before you go, Jason, because there is just something I just want to pitch on. Would you also say that the landscape of investment has changed, or is it because there is no more information about it? Because initially, when people thought about investing, as you mentioned, people think about having millions of dollars to do something,
Oh,
whereas
David,
now, whereas
sorry
now
to
it
cut
has.
you off.
Yeah, man, definitely. Go ahead.
Yeah, man. So for some time there have been financial barriers, and I believe it was intentional to investing because at some point the brokers are the institutions that are the gatekeepers that would allow certain people to invest. They required a whole heap of money to invest. Some of them want 250,000, some up to $1 million. So I think they will drop down to like all of 5,000 and 10,000. I think that probably about 10 to 15 years ago, if that far. So sorry if we interrupted one. We can go back to your line of question now.
Yeah, man. So that's exactly what I was saying because usually what you would have thought. I mean, what the all right, the original thought was that you have to have millions to invest. However, now it seems as if the landscape has become a little bit more level, where meaning you can start from basically just about what you have. You don't need that millions to start. You can start from what you have.
Yeah, man.
So that's basically what I was saying.
Yeah, and you're right, and the landscape has changed, but let me tell you what needs to happen first. Even though the landscape has changed, you find that a lot of us still not taking advantage of it. You know why? That's because of
Right.
mindset.
Yes,
You see me?
man.
So even though the
Yeah.
gatekeeper them free up the thing, you have a lot of Jamaicans still not investing for many reasons. And I think the top
Mm-hmm.
three are knowledge about investing,
Mm-hmm.
the
Yeah.
mindset, and a lot of us just don't have the discipline.
Yeah.
So,
True, true, true,
yeah, man.
true,
So the
true.
gatekeeper them kind of free up the thing, but are we still taking advantage of it? Not a lot of us.
Yeah. Yeah, man. True. And just a disclaimer with the my definition of risk. Make sure I'm saying, however, with knowledge, understanding, information, and research, you can limit your risk, Zane, because you're not gonna go out there and do something blindly. You will have this information, research, and knowledge can come from someone else. It can come from something you see on Google. It can come from something you see on YouTube. But just blindly go do something because somebody tell you, right? So now to move on to the next slide, the I'm going to show you three types of investments, right? And the level of risk and the returns, sorry, the returns. So let me just move on to the next slide. I see this lovely pyramid, right? Nice color, not true. So
Yeah.
yeah, if vertically you see high and low. Low at the bottom, high at the top. To your left you have risk, and to your right you have return. Right? Right now at the bottom, I think that's what most of us are used to. A savings account and a fixed deposit. Like me I tell Jason.
Yeah, man. So now that them teach you from where you go primary school, man, get a little bank book and come save.
Save, just
And a lot
save.
of us still, yeah, man, a lot of us still have that habit, man. Savings, that one with the S.
Yeah man. And then right above that you have bonds. Right? And just a simple definition what a bond is. It's like a loan you give to somebody, right? And they agree to pay you a fixed amount usually at a certain amount of time. And at the end of the time, you get back the money that you invest. That gives you more return than a savings account and a fixed deposit. It carries a little bit more risk because in certain circumstances, the person who or the business or the government that you might lend the money to, they can default on it and you lose the money, right? Or them decide to then go pay you back less than what you give them because that's what they can afford. But
Def-
But don't look at the last part that I said and say, "Oh my God, I'm gonna this investing thing is not for me," because he said that I could lose my money or lose some of it. Because we've lost money doing things more frivolous, frivolous things. This is something for your own benefit. So why not? At the top, you have things like provide higher returns or some of the highest returns. You have cryptocurrency, which I don't know much about. You have NFTs, you have art, and then you have stocks, which is my area of interest and expertise, right? Now, I'm going to move on to the next slide, and I'll be discussing four key areas, in my opinion, where investing and saving differs, right? Here you have savings to your left, investing to your right. Now, when I use the term usually, that's the rule. Everything else is the exception. So with savings, it's usually to meet short-term goals and provide a safety net for emergency expenses, right? While with investing, the objective is usually, but not limited to, long-term goals. Notice I said long-term goals are not long-term, right? And
Goals.
someone, yeah, and some of the example of the objective, long-term objectives for investing is our children's college tuition, buying a house, retirement, and wealth creation, right? Meanwhile, they might save towards a TV, they might save towards buying a new stove, a fridge. Next couple of months or 3 months, they might throw a little part there, and get the partner draw, and the next 3 months they will take it by the stove. I think they're kind of short term. Now, with saving, generally, with access, you can access your money almost instantly. You can get the money when you want it. Right now, if yesterday and you say, "Oh, you want a 5 grand," and him can jump in a car, assuming that is, and just go down on the machine, put in car and take out the 5 grand. With investing now, the access is not instant like a bank account. Today is Sunday, and I'll be surprised if someone say, "Yo, you know, so me have some money in my investment account and I'm going to town right now go take out it. I go sell the investment and take out it." I'll be surprised if they go in town and do it. I don't want that link there to that institution there. I don't want that link there. No, with saving, the risk is there's little to no chance of your saving losing value. Say, "Yo, you put in your 10 grand or 20 grand in your savings account, the hold it for a certain amount of time, I go back and look. The only thing you might see is that the bank might charge you a little fee. But assuming that the bank will charge you no fee, you say, go always, you can assure that you can go back to this and see the money you put in, they go sit in your savings account. Right? With investing now, the risk is more, right? And that's depending on the type of investment, because some investment give you more return, but they come with more risk. And one key thing with investing is that the more risk, you must be compensated. For higher returns or more returns, then there's more risk. I'm going to give an example, Zane. Now,
Okay.
if me have a brethren, I know say, "Yo, you might come borrow, you might take a loan from me, right?" And I say, "Yo, you know, so I want to charge a little interest on the money, when I 10 grand, go charge at 10%. So I know saying you have to pay me back how much? $1,100, $11,000 in. But at the same time, we go out there, I see one little investing initiative on in the bank they have, and they can give you the same 10%. Who you think might carry the more risk? We want to add say, "Yo, your bridging might some know if you manage money." So you decide to go charge them a little, and who you think we go invest with? The bank or the bridging might default on the money.
I'm going to invest with my bridge. Sorry, I'm going to invest with the bank,
Yeah, man. Yeah, because guess
I'm
what? You see, even though it was my same, one carry less risk. And when you go on, put yourself in a position to go in a bridging your money, and just know say, and the money you might not be able to lose. See it and not pay back. Cool?
Yeah.
Yeah, man. And just to add something more to it. So if I got invest in something more risky like a stocks, you're not gonna expect it or a bond. You're not gonna expect to have the same level of a return for in money like a savings account. You have to give something more, man. I'm not trying to say, with the bonds, then can default on it. The savings, you don't have to really worry about that. Not have to worry about that at all.
Exactly, exactly.
Yeah, man, with saving, the returns is minuscule due to the low risk. Cool. Right now, NCB they pay like 1/10 of 1%, and you have to put in a $200,000 to get that little pittance there. 1/10 of 1%. With investing now, the return is usually higher than savings. And you notice me use that phrase usually higher than savings and nothing specific because, as I said earlier, nothing guaranteed with investing. But one thing for sure, generally, the return is usually higher than savings. No, I had mentioned something earlier about investing and long term. That those things are is quite often synonymous. Remember, investing is not necessarily long term. It can be used to meet long term goals. And I'm going to show you some examples of persons who they make money after investing and not necessarily for the long term. Right? These are just three screenshots I got online from Twitter, and I don't know them personally, but I'm familiar with them. Right? This person at the top left is H. Danai Hall. He used to work at Mayberry, but he's doing his thing privately now as a private he's doing his thing by himself as a investment advisor. Shanice Williams, she do her own thing out there. And they have this young man named Philip Burgess. And this are in January since here. You read that? Then I say in returns so far for 2022, just 28 days or 30 days in a year, he cover the entire salary. He used to work at Mayberry, see? And we can let's assume that it was 2.5 million. At 28 days, he was able to get that type of return on investment and the stock market.
2 point. So to speak on his outcome so far,
Mm.
to have your investment paying you what your yearly salary would have been, what would be the incentive for you to
Keep working.
prefer, and yeah, exactly, what would be the incentive for you to working? I mean, with the understanding, of course, that the volatility of the market and the uncertainty. But
Yeah.
however, if you can be using your investment accounts to make, let's even half of your yearly salary in a
Hmm.
month, that would seem
Yeah.
like something that you want to put more interest, put more time, put more effort into, or basically try to keep on your present trajectory. I mean, because
Ah,
that is some returns. That is some returns.
yeah, man. And I have to say is that in terms of incentives, each that would be unique to each person, right? There might be something personal. There might be some personal attachment to the work that they do, but also at the same time, if someone is considering, if someone should come upon the knowledge, right, and they know how to do something like this, if they're considering quitting their 9 to 5 and focusing on this because it'll pay more money than them 9 to 5, make sure that they have a plan. That is very important. They can't just go out there and say, all right, I'm going to try that thing. Cool.
True, that is true. That is true.
Yeah, man. And to the bottom, you will see Shanice Williams, right? Look at this tweet that was back in January 10th, where she said that she started with $15,000 in back in 2017, right? $15,000. She said that she became a millionaire and still nowhere near where she wants to be. Listen to this important last sentence. You won't get everything overnight, but you have to start somewhere. And then she said invest. Right? Look how she started. When she started in 2017, she made a loss. Look how she ended in 2021. And remember that 2021 was the COVID year, So you just know, say, yo,
Yeah.
businesses and things needs 100. And also at the top right, you have Philip Burgess. Philip Burgess, where him actually I say, yo, him surpassing monthly salary. Yes, from investing. And you know get paid. I guess that's what they would have meant when they say Monday no check, that's how I'm assuming. But yeah man, these are just some of them, right? Now,
yeah.
let's move on and talk about the benefits of saving over investing, right? No, benefits. No, I'm sorry. The benefit of investing over savings.
I was
Yeah, man.
that
So,
to wait no to put benefits of savings that would be a hard sell for you.
yeah, man.
That would be something hard
Boy,
for you to make a case on.
yeah, man. So
Why
the
why
first thing you
why?
have,
Yes, go ahead.
yeah, man. Yeah, man. You have protection against inflation, right? So you've heard about inflation before, and what inflation basically is the constant increase in the price of things that we buy and we want, right? So now with investing, as the returns or the profit that you get from it, whether it be 3%, 4%, 5%, or even 100%, as the returns from investing goes up, this will start to cancel out inflation little by little, because what happens is that inflation are what the Bank of Jamaica does is that they try to quantify inflation down to a percentage, and that is very important. So if you know, say, yo, the average increase in the things we buy, I like a 5%, you know, say, yo, investment is 10% in my money, put in your account, investment account is 10%, you know, say, yo, your investment is above inflation, and the value of your investment worth is not going down, right? Because
Yeah,
inflation
yeah.
eat out the value. Second, a benefit of investing over saving, a means for wealth creation. And this right here, so where it say, let me go back to the slide, where it say wealth is determined by what you own, underline own, control and can pass on by Dr. Claude Anderson, right? You need to own things, right? And when you invest, those things that you invest in, those assets, you can pass them on and start the process of wealth creation, right? And wealth measures the value of the assets, right?
True,
Of
true.
worth owned by a person. So guess what? You need resources to own assets. So back to what we saying at the first slide, there can be no revolution without what? Finance. And
Without
revolution need
finance.
change. Yes, you need say basically a revolution is change. So you need finance. Yeah, man. So if you own nothing, no assets, you have nothing to pass on. And maybe they say, yo, if you're a man, we then consider a provider and have nothing to pass on to your youth, you put them at a disadvantage compared to other people. And if that is not an eye opener, then boy, more needs to be done then. No,
True,
the
true.
third one now says path for becoming a controller. This is probably the first time persons are going to hear this. I've seen this before in the stock market. Let's say so you have persons out there from the money people and the big wigs as Jason said in a society, they have the money and them start to buy some shares in a company or a business that them like and them see the vision and the future in. But them start off with a little bit of shares in the company, right? But them see the potential for the company in the future, right? And them say, boy, want control of business, you know. And what them start do? Them go to the person who own it, or have the most own the most shares, who is the controller, and them say, guess what? I would like to buy your business. Tell me, I would like to give you this price. They might have put on a little extra on the top because them want it. And by the fact that them have most of the shares in that business, they are now a controller. So you might have other persons out there might own shares in that business, but their amount of shares now compared to the person who own the most. So that puts them in the position of being a controller. And then basically
So
have
so
well,
just to interject for a second. So what you're saying is this. Let's say, for example, you start to buy shares in a small company. Let's say
mm,
there's a company named Mr. Nemad and Sons, for example. And
yeah,
you start to buy shares in my company, and over months and years, you start to buy more and more shares. You're saying at that point when you hit owning 51% of the shares that my company offer, you then, by virtue of the amount of shares you own in the company, you are now, how should I say, primary um, owner of the
majority
company,
shareholder, the
right?
control.
Ma-
Right.
Majority
Yeah,
shareholder.
yes, man. And you see, it's not as easy as how I said it because there are other shareholders who have a good amount of shares. They might decide that they don't want to sell, but you have to approach them and negotiate a buyout or for them to sell it to you,
Okay.
right?
But
Yeah.
just to add to that though, would a company put maybe less than would a company put more than a certain amount of shares on the market, or would companies, let's say, only have a particular amount of shares available for persons to buy, or is it a case that you can have access to, by virtue of the shares, a certain amount of percentage of ownership in the company?
All right. Good question. You hear that? You hear that? So I'm going to explain how that works, right? So I'm going to give you an example. So let's say CPJ. A lot of persons in Montego Bay are familiar with CPJ. Mark Hart and Tom Tyler are they have significant good amount of shares they own CPJ stock, right? So let's say that me own 15% and Mark Hart own 30 and emerging Tom Tyler co-founder owns 30, right? So what would happen? So
Yes.
go back. Let me go back a little. Yeah, man. What would happen is that most companies they would sell maybe about 20 to 30 or 40% of them shares to the public for the first time. Generally, let me sell maybe at 20% to the public, right? You see, once those stocks can be bought on the stock exchange, someone who has the money can go to the persons who own a significant amount of shares, the top 10 shareholders, and say, yo, want buy some or all of the shares where you control, and here's what I'm willing to pay. It's now up to them to say yes or no based on whatever reason.
Okay, 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 okay,
Yeah,
okay. I get
yeah.
you. I get you so far. I get the direction you're heading. You know.
Mm.
So that's basically what I wanted to clarify for a second. And trust me, this really interesting.
If you think
Really
that is
interesting.
interesting, wait until I see the next slide. I'm gonna. I was strapped for time, but I did the best that I could. Right. But this next slide now, you've probably seen it a couple of times before because I accidentally, clicked on it. So to your left, you have someone who is saving, who has saved $120,000 by saving $10,000 at the end of every month, right?
Okay.
And to your left, you have someone who decide that they're going to invest and they're going to take $10,000 and buy some CPJ shares at whatever price it is at the end of the month. And over time, the amount of money that they invest accumulate for the 12 months, and I'm going to show you the amount of shares that they've owned hypothetically, right? And trust me, these are based on real calculations, right? The commission fee of I think it's 0.05%,
Yes, the zero
and
point five percent.
yeah, and the 0.33 of 1%. So we just leave that alone. That is called the fee. The JSC says is the money that you pay the JSC to when you use a broker, and the GCP can also government have getting a little thing out of it. So they are assuming that the interest rate is calculated annually. The person saving $10,000 per month religiously at the end of each month would have saved $120,000. 12 months, 10,000, that's $120,000, right? So far, so good. Calculation, right? The total gain is $120,000, and the interest is $120, right? So after 12
Hold on,
months
hold on,
of hard,
hold on. Give me a pause this again. Now. Just to kind
mm,
of break it down a bit further. So what you're saying is this: if I save
mm,
$10,000 per month for 12 months,
mm,
right?
mm,
I would have saved 12 times 10 of the 120, and on my $120,000, if I were saving that money in a savings account, the
mm,
total amount of interest that I would have gained on
mm,
that in that savings account would be
Mhm.
$120.
Yeah.
And
I
this
know
is
I'm
and
laughing
this
to you,
is
my boss.
okay. And just let me just get it clear again. And this
Yeah.
is we are
Mhm.
not we are not speaking as yet on bank fees and any other thing that the bank would normally take out of your money. Is that what you're saying to me right now?
Yeah, man. You hit the nail on
Because
the head.
right now, you know, me need to. Okay, fair enough.
No.
I I
So the,
I I find this to be really enlightening, and I am sure that my guests are finding it to be really enlightening as well. So for all the guys who are watching on YouTube, please go and click that like button and that share, please. Thank you so much for being here. Now let us go right on. Tomorrow is Monday. I think I'll be visiting a couple of banks too. Yeah.
all right. So no, you're right. I'm gonna have to explain a little bit more because it has more information. So what this person has done, person B, they have taken their $10,000 and instead of saving it, they bought some CPJ shares at the end of every month, the last trading day of every month. And then the assumption there is that they buy it at the closing price, the price of them say it worth, the shares worth, one single share worth at the last business day of the month, right?
Okay, so just for clarity, this would mean that this would be basically the highest cost that it was being sold for the month.
Yeah.
It would be reasonable to conclude that, correct?
Oh, sorry, not the highest cost, but
Okay,
the,
okay.
the
The
value.
last the last list price.
Yeah. The
Okay,
value of the share. Yeah. So January, this person would have been able to buy 3,710 CPJ shares. Some people would say, oh, look a bit that. I want this, right? And they would have bought it at $2.67. January, February, then the price go up. The price drop actually to $3.44. So them can buy now 2,879. Fast forward now to December. CPJ share price gone to $13.04. $2.67, $13.04. Shares purchase gone down to 760 with the $10,000. So now, so the nice part I know, alright? And do the money law for marital single. Total investment 120,000, just like the person over here what they save. Shares purchased, then can get 26,346 CPD shares. Right? The value of those shares is worth $343,552.90. The profit that person would have made on their $120,000 is 200 and the whopping $223,553. And the returns is
Mm,
186.29%. So look to your left and
mm,
look to your right, look to your left and look to your right, and tell me
mm.
if you see the difference, how
Yeah,
it wide.
yeah,
So
yeah.
I'm not saying I'm not. I'm sorry. Go ahead.
No, so what I'm saying is I'm just looking at the numbers and I realize you said the final value of the shares. And just to
Mm,
clarify, the final value of the shares would have to be calculated at the end of the year,
mm.
would have been calculated at the share price of 1304. So
Yes, man.
all of those that you bought in February, the price of the share would have kept rising. And now the same shares that you bought for $2, if you
Mm.
were to sell it, it is now worth $13.
Yeah,
So,
that's right.
wow, oh, I like how that
So,
sound.
so I'm not saying this to say, as a man in come, as I'm not saying this to say, don't sleep. I'm not saying this for you to not sleep tonight because I said, you know, start, I'm going to run good on me credit good and I take out all of the money out of my savings account and flipping us on investment account. No, your still savings have a use. So I'm not saying you should take out everything and put in an investment account because you go have emergencies. So you should know and have a goal as much you want to invest and how much you need to save and put on. Right? This is just to
Definitely,
illustrate
definitely.
how the different is night and day. And this is not an exceptional occurrence because I'm going to show you something further down. That's going to be an eye opener about a couple slides further, right? Now,
Okay.
this slide is important. This is important on the next slide. I just want to make some money. Why do I need to have an investment goal? And look at what this message on the board says. A goal without a plan is just a wish. I'm not saying that if you get up and try a thing, you might not by chance surprise yourself or I wanna have and do something and it happen. But if you don't have a plan, if you're doing something consistently, you might get varying results versus somebody who have a plan where they can take it and wash, rinse and repeat. Because they know say by following this plan, they can make this happen. Right?
Yeah. Yeah.
Moving on to the next
So
slide. I'm sorry, go ahead.
yeah, what I was saying is that when I look at this slide, basically what I'm seeing is like
Mm,
you want to travel from Montego Bay to Ochi.
mm.
First off, if you don't know which vehicle to take, you're basically lost.
Yeah.
Isn't that correct?
Yeah, you might have up a west. You
Yeah,
might
you
have
may end
west
up at
London.
West. at, at some point, you may eventually reach Ochi after doing a tour of the island.
Yes.
But I mean, if you know where you're going and you know how to get there, because what
Yeah.
I'm seeing here is a plan. This is a very important thing that a lot of people do not take planning as something that is really important. Because they have
Yeah.
another speech what they normally say is that if you fail to plan,
Yeah.
you're planning to fail.
Yeah. And
So I mean,
yeah, man, and put that into context. And to put that into context, some person might think, but why we can still plan and fail, so that make no sense. However, you must still plan. You
yeah,
must
it's a
still
probability.
plan.
I think it comes down to the probability. Yes, you may still
Yeah.
fail, but there's a higher
Yeah.
chance that you will be successful.
Yeah, man. You can know say, all right, we do this, and this happen. So we go change it up a little bit. And me think
There
say,
you
yo,
go.
you know what me go wrong? We need to change this specific part. And me think say it can work now. But remember, you must have persistence and determination.
There you
All
go.
right.
There you go. There you go.
Uh, and just to reinforce this point, yes, you need an investment goal. Before you invest, think about your investment goal. Like any other goal, it must be SMART, like acronym SMART. It must be
Yeah.
specific, it must be measurable, it must be attainable, it must be relevant, it must have a time component to it. See? Because if
Yeah.
somebody promises something and they never tell you when they go get it, they can always tell us, say, yo, next week, next week, next week, and then he can even tell us, say, yo, I never tell you when, just go and wait and go and build, man, or get it, man. Yes, man. you know?
Yeah, man. Go and hold it, man. You don't must get it, man. You go get it.
Yeah,
Mhm.
yeah, man.
Yes.
And to reinforce that third time, again, here's why you need a goal. Having an investment goal or a plan helps to keep you grounded, accountable, and how best to use your money to invest. Right?
True, 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 true.
And here's a scenario why you need a goal. Scenario number one. While speaking to your investment advisor, you said that you want a 25% return on your $250,000 investment in 12 months. No, the investment advisor might say no, that no, possibly no, but at least you have an idea of what you want, right? When you go out there,
True, true,
and the
true.
investment advisor can tell at the same time that yes, you said that you want a 25% return. I would suggest that you do X, Y, Z versus versus somebody else go do something else, which is something happening at the next slide now. Scenario number two: I want to make a lot of money. See, we heard that statement regular and quite often, right? A
Yeah.
statement, an objective like that or a goal is too open-ended with no time frame or expected return. And such an objective, such a goal like that, I suited with somebody where do, racetrack or they buy a lot or they do something chop centric, Like they might chop the line, something like that.
Yeah, yeah.
Yeah. When I say you just want to make a bag of money. When it comes to investing, you kind of have to put more flesh on it and make it more detailed and well planned out. And that's
True,
how
true.
Michael Leach, they went there by chance, you man have goals, man have a plan.
And this is something that many people kind of overlook. Many people want to wait at the finish line, as they say. You want to sit and wait on
Yeah.
the finish line. You don't look at the challenges that the person had to overcome.
Yeah. Yes, that's
So
very
I mean,
important.
yeah. And if I were to even go back to your previous slide where you said you
Mm-hmm.
want to make a particular amount at a particular time, what
Yeah.
that does is, let's say you want to have $1 million in your investment by in a year time, you can break
Mm-hmm.
it down and know how much you need to invest, and you can test the market. You can basically have a finger on the pulse of the market,
Yeah,
so you
man.
know the probability of your goal being successful. So
Yeah, man. I want that.
even if you don't meet your goal, you can
Mm-hmm.
look into your planning process and see where you went wrong, so you can make adjustments for
Yeah.
the next year.
Yeah, man. And one thing that I did mention in the previous slide, about 2 or 3 slides before, where I was comparing savings and investing over a 12-month period. You notice that that particular person didn't just invest $10,000 and left it. They invest $10,000 every month.
Consistency.
Yes, that is important with investing, because even sometimes when the invest and the price of the investment is going down, right? Once you have the knowledge, you do your research, right? And you just know say even though the price will go down from now, you know say maybe a month or two down the line things go turn around.
Exactly.
Yeah, and that's what kind of limit your risk. So now reason number three why I need a goal. I'm gonna give you an example. When to sell. January 3, 2020 CPJ stock price was $2.54. January 25th, 2022 CPJ stock price is at $16.08. And I think Friday it had $19 and change. Now, if a person never have a goal, you go stay like the person over there up on the left. That people always ask me this: should I sell or not sell, because they don't know. Guess what? They know they have a goal to say, oh, guess what? I'm going to sell at this price, or I'm going to sell as soon as my returns reach here. So it's like the man say, should I buy? Should I sell? And they might make a decision based on impulse. But if you have your plan or your goal, at least at least you could be making your decision based on something logical or rational.
Exactly. So basically, what I'm getting from what you're saying is this: it's not every time that you should be. For example, if you look at the pricing that you have on the slide here,
Mm-hmm.
in 2021, the stock price was 254, and
Mm-hmm.
now it is 1608. Now,
Mm-hmm.
if I bought 1,000 units last year,
Mm-hmm.
most people, I believe, would be itching to sell at this price, as you mentioned, if
Yeah.
there is no goal. But
Yeah.
however, if you, based on what your goal is for the stock, because it is
Mm-hmm.
going up, so there's a chance that you can
Yeah.
say, okay, this seems to be a stock that I can hold on for the long term. Maybe next year it is 3 to 4 times what it is now.
That's a good question. It's a good question that you asked, Damien, right? So now, remember your goal is to reach. All right. So you might have a goal for the stock which is different from your goal overall for your investment,
Okay.
right? Um, with research, information, and know-how, you might have an idea if, all right, I think would be a good time for me to sell, right? However, if you realize that, hey, boy, more tourists are coming to our country, and then there's a CPJ that put my new location up at Draxal and said, and and up a cent, and me just build what if a big house over there up at Draxal, and what if a high-end place, and CPJ they're going to a retail sector like Grace Kennedy, separate, and we can't go sell at $16.08, man. You might tell yourself, say, boy, I want to sell it now, but we can't wait, we can sell it in a 2024, right?
Okay.
Yeah.
Yeah,
Versus
I
the
see. I see what you're getting at.
yeah, man, look at the person to your right. Who was the plan? In cool, calm, and collective. right? And as much as our stock
Yeah.
price they go up in this, they say hold on,
As a
hold,
whole.
hold, hold. No, this company moving in Braveheart, you know.
Yeah, man. I've seen Braveheart a couple of times.
Yes, man. So I've been talking about stocks for a while, and I must try to explain what is a stock to the best of my knowledge. All right. No. All right. What is a stock? First, a stock represents part ownership in a company. It's an asset, right? You own it from buying it on the stock market, or when the company sells shares to the public for the first time, right?
Okay.
Yeah. And it can also be an and too, depending because people do buy when them buy shares. Well, you own, yeah. I'm not changing this there. Now the third point: someone gets your money and you get their stock. That's it. They have a stock. Somebody out there have a stock where you want. You have the money, and they want your money. So it's an exchange. They give you the stock
Okay.
at whatever price that is, right? And then get your
So
money.
just a second. So many companies, because sometimes when you watch a stock market and you see the IPOs come out, which the initial um whether the first time the company goes onto the stock market, many times
Hmm.
they do this. One of the major factors why they do it is to raise money, correct?
Yes, man.
So
I
like
remember.
they want to expand, or they would need some cash now to do something
Yeah,
to expand the company or something to that
yeah, man.
effect.
Yeah, man. So as a business, they can raise money or buy assets either through borrowing or debt or sell shares, right? So
Okay.
them objective can either be that somebody who used to own shares before might want cash out because they believe, say, guess what? Me they wait 10 years. 10 years are my objective, so I'm going to sell mine to the public, right? And the objective for the IPO could be that, as I said, they want to expand, right? They want to expand, they want to buy more equipment, they want to buy better equipment, they want to pay down some debt, right?
True.
Yeah, man. And with stocks, when you own it, you are now a shareholder, right?
Own
So
part of the company.
yeah, man. So not because so some people when they buy stocks, they don't really pay no money or really fussy over it, but not because you don't own an office at the company with your name on the door, and you go in there after the secretary morning and them are doing coffee. Not because you don't get a treatment there. That means you not look funny like that. As
Yeah,
the fussy over it, right? Which that's
yeah.
okay if you're not fussy over it, but when you're a shareholder, you just know say, yo, you want part of the company, they can look on and say, guess what? Me is part one in that company there now. Right? And guess
And
what? So when you go ahead.
yeah, man. So when you own stocks, do they have to give you their company financials? For I think some companies give you a quarterly report, the financial reports, so you actually have access to what the company's money, what your money is being spent on, and all of that. Is that correct for most companies that trade on the stock market?
All of them. Because the stock market ensure that they have rules and regulations and there are consequences. So they're required based on the rules and I think by
Okay.
law to do it. Right? And the stock market requires that they post that information 45 days after the quarter end. They give them up to
Oh,
45 days. And if they're going to be late, they're required to publicly state that they're going to file for an extension and by when they intend to have it information public.
okay.
Amen.
That's interesting information right there, man.
Amen. So at the bottom, some of these companies you see right here, they're all on Jamaica Stock Exchange. Visinco, which is in the retail industry and distribution, manufacturing. You have Fesco, that gas station where you see, that's on the stock
Okay.
exchange. People go
Okay.
always want to use gas, you know, and gas can go if you
Yeah.
know. You have
Yeah.
CPJ. CPJ, and them feed the tourists that come here for the most part. They have the largest share in the tourism industry. feel the hotels. Now, Fontana, nice. We going the other day, I asked one young lady in there because they take the vaccine, man. It's so nice. The customer
Yeah,
service so nice.
you hit,
It was a
you,
joke.
you're hitting on you're hitting on the people.
All right, and then you have NCB Financial Group, not the bank, the NCB Financial Group, which is comprises of more than one company, right?
Yeah.
Which includes the bank and a few other subsidiaries. All right. So now to move on to the next slide, I'm gonna explain to the best of my knowledge what is a stock exchange, right?
Okay.
I think I should. So I'm gonna use an example of a market. What is a market? A market is where things are bought and sold, right? Would you agree with me on that?
Yes, I would agree on that one.
All right. A market of buyers and sellers. Do you agree with me on that?
Yes.
And transaction at the market, Zane, whether I don't a Charles Gardner or Harbour Street, usually involves money, right?
Yeah. Yeah. For
All
the
right.
most
So the
part.
stock exchange, yeah, man. So the stock exchange is a place to buy and sell certain investments like stocks and bonds, right? And did you know that the Jamaica Stock Exchange is the number one performing stock exchange in the world for 2015 and 2018, right?
I didn't become aware of that until 2020.
Yes, man. So what that means is that enough time people talk about the US Stock Exchange and this and that.
And
Our stock
Nasdaq.
exchange don't. Our stock exchange is suited for us and our economy, right? Enough people here that talk about them buy US stocks. They not get type of return that some people they get on the Jamaica Stock Exchange down here, right? So what this being number one, what it means for the Jamaica Stock Exchange is that the overall average return, right, for the exchange, when they average it down, it is the highest in the world. So when they average up all of the stocks they do good, all the stocks they do bad, and compare with other stock exchange, when they are the top, they can be with just and say, yes, Jamaica Stock Exchange. I don't yard it,
Okay.
right?
And I believe with that information, this it would be like a driving force to
Mm,
empower more people to invest in the stock exchange. And I
yeah.
believe isn't a case where the more people you have investing, the
Mm-hmm.
more, let's say, the more it will grow, and the more, let's say, the returns will become. I believe, and I don't know if I'm understanding it correctly. The more people that are involved, the more it will, the better it will perform. Let's try to put it that way.
Well, I'm going to tell you why. It's because all right, so the stock market is in some way a reflection of the businesses that are operating in our economy, right? If so in you're not gonna have very rarely you might have a situation where all businesses on the stock market are doing very poorly because each business is unique and they offer different things and operate in different ways. Like for example, CPJ when COVID came, they did poorly because hotels were closed and they couldn't get paid selling product to hotels, and then profit and thing get affected. Versus meal pack now, a lot of persons wanted to order stuff online and wanted to do home deliveries. Meal pack was booming, right? So 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 what happened is that this if the companies in the economy is doing quite well and provide good returns, great returns, excellent returns, delivering excellent results, then it is likely that it will help a lot of these companies are doing so well, will likely make our stock exchange perform quite well and probably be number one. That's how it will happen.
Okay, okay, okay.
Back in 2015, they never had as much persons investing on the stock exchange as is now in 2021 or 2022.
Exactly, exactly.
Yeah,
Okay.
man. So moving on to the next slide, I have some more interesting facts. The Jamaica Stock Exchange top 15 best performing stocks for 2021. Which company that is at the top?
CPJ.
Where is that company? Is it located in Kingston, or is it located in Montego Bay? Headquarters in Montego Bay.
Montego Bay, right around this.
Yeah, man. Mobile company, man, the best performing on the stock exchange, 405.6%.
Wow.
Right?
So,
And below
wow.
that, you have Fesco, a little gas station there. A little brand, no, I'm sorry, a little branding is on the gas station there,
I,
406%.
to be honest, I can't recall seeing that branding on a gas station. I don't know. Where is one located?
I think
Because I can't recall seeing one.
probably on Barney Street I might have seen one, but I know so one day I'm on there, I think.
Okay.
Yeah, man. So below that, you have a company called Siboney. It's a company that basically it's a shell company. No, not a shell company. Basically, the company is not making any money. It's a company that's on the stock market that was bankrupt from after it went through the
I,
FinSac.
I haven't heard of Siboney for maybe 20 years, honestly.
Yeah, they're hoping for someone to come and buy the company.
Okay.
But investor sentiments kind of drive up the price, and there was a 256.4% gain, even though the company wasn't, pro, I should say, producing a profit.
Okay. I'm surprised I don't see career. I'm surprised I don't see careers anywhere there.
Well, everybody have their time, man. You
Okay.
know, and then
Okay.
there's some other companies like Lombard Depot. You have
Yeah.
Jamaica Teas, RJR, Dolphin Co, Honey Bun, West Kennedy,
Yeah.
Kingston Live
Oh,
Entertainment, which are using both tracks and records,
yeah.
and they have medical disposable supplies. Yeah, man. So I'm going to talk about what is inflation, right? Because it is important for me to talk about it to tie into what I'm going to say after this, right? What is inflation? Inflation is the constant increase in the price of things money can buy, even that S word, sex, right? So the price, so the price of,
Inflation.
yeah, man. So the price of what you want gone up, and the things your money can buy gets less. Price you want buy gone up, and the things your money can buy get less. So that big bag there, the bag start get smaller and smaller, even though I spend the same amount of money. So guess what? Chicken price gone up, you know, say yes, they can either eat junk, as the lady said on TV, they can profit, right? Or complain too.
Yeah.
Buy some chicken, still buy a chicken, or raise your own chicken. Argument done, as Andrew said, right?
Yeah.
And this, I'm gonna bring up some situations where things gone up. And guess what? You can either can profit, you can complain, or you can build your own. Right? Chicken price gone up. Make sure you buy some Jamaica broiler stock and benefit from it. Right? That means you go make more money. Push a
Yeah.
bank raise them bank fee, NCB. See if you can buy some NCB stock. Get back some other money there in a dividends. But them a charge for
Yeah.
bank fees. Gas
Yeah.
price gone up. The gas price gone up every week. And you drive a car and say, boy, they can't bother them people, they are wicked, you know. Every week gas gone up. Yeah, complain. Try profit for some where they go on, man. Buy some Fesco stuff. Right?
Yeah. You can either
Toll fees.
complain or you can profit.
Yeah. Toll fees gone up. You can go up on the stock market and buy some of the Trans Jamaica Highway shares, man. You hear say tourism are rebound and people might out there working in the tourism industry and some things they go on. You could have looked for the stock market and say, is there a stock on the stock market that is from the
Tourism
tourism
based.
industry? Look at the CPJ, you see Dolphin Cove, you see Express Catering who own the franchise them where the departure lounge MBJ. Right? You can see the people who are coming and they carry COVID come or whatever in the high numbers. You can buy some of the stock them, man. Buy some of the stock and profit from it. You can look around here and see things, man. You can say, but wait, is this company on the stock market? You have to find out. You go you
Yeah.
drive, you see all of these big roads are built. You see the Chinaman was a build these highways. House are built up, much house they build up everywhere. Construction boom, but say wait.
Yeah.
The things when they in construction now, you know, say cement important. That means they go want cement and who they make cement. You find out say
Carib
carry cement.
cement. Buy
Carry
some
cement up
stock.
on the stock market. Yeah man, buy some stock man and profit from it. Right?
True.
Now, to close out, we're gonna talk about what you must do to open an investment account in Jamaica. Right? You can see from the picture, say, easy. But when it
Mm-hmm.
comes to bank account, yeah, hard and the rough back, all the things. But hold on, it's not as simple as, not as hard, I should say, as other transaction with the bank might stay. Sure, come on, on the screen, man. Sorry about that, people.
Yeah, man, that's fine.
Go back to the last slide. Almost finished. Hope some of the boring because the people that might be there.
No, man, it's okay, man. I have my guests here. You know, people coming in, people checking because the point is just to have people have an understanding of what I do on my platform. Is
Yeah.
about empowering people, specifically males, because in the time we're living right now, as males, we need the males to be strong and take the positions that they're
Man,
God given right. You know,
man.
this
So they, so they,
the leadership have leadership qualities, have leadership values, and this is just one of the things. This is just one of the ways that you can empower yourself with knowledge, get your
man,
finances sorted
you can
out.
fit me proud.
You
You
know,
can fit me proud that your woman respect you because then she not gonna tell you the truth say yo you work this and that.
exactly, because
Yeah, man. So
one of the things as males we need to understand that when you have a vision and you have a dream and you have drive, you know, that is one of the things that will actually draw your woman closer to you, because she
yeah,
see that you
man.
have a vision and you're working on something. She'll be there
Yeah,
to
man.
assist.
Yeah, man. And you see, a sensible woman is attracted to a man that she sees as valuable, right? And
There you
trust me,
go.
one of those things is being the finances to sort out the finances, right? And once you see that and notice that, she's going to be attracted to you because she sees as someone as valuable, right?
Exactly, exactly. And I'm gonna segue this. I'm gonna as soon as I'm finished out with this month, I'm gonna roll
Mm-hmm.
over into next month. And what I'm gonna be talking about is relationships, marriages. You know,
Mm-hmm.
marriage and
Yeah.
relationship. Those are the things I'm gonna be talking about over in February. So I mean, but this is a good start. This is a good jump off point. So let's talk about opening an investment account in Jamaica now. Let's see what you
Yeah,
got.
man. Yeah, man. So pretty much the requirement standard for most of them, right? In this one, valid photo ID, the TRN, proof of address, proof of employment, and last three pay slips. Some places might ask for both and two references,
Okay.
right?
Um,
Yeah, man.
so I had a I there was this investment platform that I think it NCB has.
Yes.
Is it? I think it's Go IPO.
Yes, YPO Pro, yeah.
I think it's Go IPO. I've never actually compared Go IPO versus buying stocks directly from my investment account, because
Okay.
I've never used Go IPO, but
What,
tried I have
what do you use?
gone ahead. NCB. I have my investment account with
Okay.
NCB.
Okay.
So the thing I like about them is that basically you can do it right from the platform.
Yeah. And
You can go right in, and you can even, one of the things, because this is one of the things that you touched on as well, about buying a particular amount of stock in a particular company on a monthly basis.
mm-hmm.
And one of the features that they have is basically you can set it and forget it. You
Yeah.
can set to buy a particular stock monthly
Mm.
and just set it and
Yeah.
forget it.
Yeah, man. And
So
one thing I want to say to some people, right? So yeah, you own some company stock. It's fine. You might not have the time to go through all of the numbers and the balance sheet, and you might not understand the jargons, but at least you must say you work your money, You get up out of your bed when you want to sleep, right? People this is wake up and do work, they don't want to pay you as much, and then you take up your money, say go invest in a stock and try interest you keep up with what they want in the company where you are part owner of,
mhm,
right? You have to make sure you say you at least spend one couple hours or an hour every month and say, let me go up on Google and type in the company name and see what this is just about a company I'm investing in. So you can keep up to what you go on, right? Because
exactly.
one day there is the possibility that your investment may go on good, right? And you might hear say, boy, so what happened to that business here and I think so then go lose money. And you might decide, I guess what, I'm gonna call it a day, I'm gonna sell and I'm gonna see if there's greener pastures we can go. Versus you know now pay no mind and and a couple months ago you see you gone up a certain percentage and you're glad you're alright, see it for your face at work and then you go back and look and you say, no, right, that what happened. All right. A good amount of what we gain from investment gone down right now. Alright? I'm not saying this to scare anyone, I'm saying this to encourage persons too. When you invest in a company, spend a little time, man. Now what we spend time to things are not even important, man. Spend a little hour, man, or 30 minutes and go up on Google and type in see what news or information I can get about the company.
Exactly,
Right?
exactly. Because as you mentioned just now, and I think people may take this lightly. You
Mm.
actually own a part of the company. So what the
Yeah.
company, it is important what the company does, because whatever the company is doing it with
Mm.
your money, your investment. If the
Yeah.
company lose,
Yeah.
if the company lose, you
Yeah.
lose.
Let me let me
If
let
the
me,
company
let me
if the company gain, you gain. So you have a vested interest.
yeah, man. As a matter of fact, I've never met this person before, but you have this gray haired old man. My assumption is that this man that do thing for a long time. So when that man there, go one general meeting, one time the CEOs and everybody, the big shot, they come off, tell what they want the company. That the man they take out the glasses and put it on his nose. And the man take out the annual report up in the book and say, so why is the advertising cost gone up this year? What's the reason for that? Zane? And then he moved on and said, all right, I see here we are paying more for your loan. What's the reason for that? Why are we paying more? The old man they got a meeting and they asked them question And it kind of funny
Yeah,
because most of the time when I got a meeting the people don't ask no question. They just don't listen. The man
yeah,
will come
but
like say, yo, I am my
yeah,
boss.
yeah, but exactly
You
that
must say
is
I am my
exactly
boss. The
that's
man say, you
exactly
come
what
and
he's
talk to
saying.
me.
That's exactly what he's saying. It's
The
my
man
money
must
you're
come
doing
and
this
talk.
with, so I want to know how my money is being spent. And I mean that is the attitude that even as investors we
Mhm.
all should have.
Yeah.
When you invest
And
in
I,
that way, that is because you want to know what go on with your money.
yeah, man. So the thing is that most companies might have their annual general meeting, which is when the persons who are running the business come together and tell you what they want. Most of them in a Kingston, So persons might not be able to make the journey, but I have one or two companies that come from mobile man like a CPJ or a Cargo Handlers Limited. If you have the time and you can spend a little time out of your day and go up with them and listen to what they have to say and ask whatever questions you might want to ask.
Yeah, man, definitely, definitely.
Trust me,
All right, Del.
yeah, man, you can ask them why the business, why, what happened, why the business
Yeah,
did so poorly this year. If you don't understand, make them tell you, yeah, an
yeah,
explanation, hold them accountable.
yeah, man.
That's it. That's it for me.
So, yeah, man. So, Dylan, thank you so much. Thank you so much for joining into them, man. It was a really enlightening session, and
Mhm.
I know that my audience got some value from this. I know that some people will be reaching out to me to say, okay, how do I? So I know this is just a beginning of our of me and you working together on a forum such as this, because people
Yeah,
are going to be asking questions, and people, this is something that people are going to want to know, because especially when you gave the comparison there between saving $120,000 versus investing $120,000. I mean, it is day and night to when it comes to decisions what works best for your money, which way is best for you
man.
to put your money. I mean, it's day and night, so I
Yeah,
really
man.
want to
And
thank you
just
so much for your time, man. And yes, you were saying something, go ahead.
yeah, man. I wanted to add one more thing. So you might have persons on the platform right now who are watching this who may have had a bad experience with investing with stocks, and they would have wanted to hear about other types of investments. But not to worry. This is just a beginning for our partnership. So once I'm available and I have the time, I can come on and discuss to the best of my knowledge what other type of investments out there that I can benefit from.
Yeah, man. So definitely thank you for your time, man. And as I mentioned, We will be staying in touch. Have yourself a wonderful evening. Thank you for coming on.
Yeah.
All right, great, great, great.
All right. Cool. Manners and respect.
Yeah, man, cool. All right. So thank you so much, guys. Thank you so much. I know many of you would have gotten some really, really good information from that. He's one of those gentlemen that I know is good with stocks and the stock market and investment. That is why I brought him onto this platform today so he could share a little bit of his knowledge. And to be honest, I was pleasantly surprised to see how much work he actually put into his presentation, the amount of knowledge that he was able to give out, you know. And as I mentioned before, this is just the beginning of our partnership. We will be doing more work together. We'll be bringing financial stability information to people who would like to get more information. And definitely, if you would like to see another, another, if you would like to see another program like this one, where I have Mr. Maxwell or other persons with that form of information on board, just go ahead and let me know in the comments. So for now, thank you so much for joining, and I really do appreciate the people who checked in, each and every one of you. I really do appreciate the new subscribers, you know, and look out for more content from me. Trying to make this space somewhere where we can have people come forward and discuss things that enlighten them, things that empower them, you know, things that make you a better person overall. This is just one of the steps. Check me out in February, where we will be speaking about marriage and relationships, you know, dating, marriage, and relationships. These are the topics that we'll be speaking about in February. So if these are things that you would like to talk about, definitely look out for more content just as this one. I'll be working with another set of persons to do more live streams like this. So on Sunday, at the same time, I am looking forward to have a program where I have some married couples come on board and tell their story. People who have been married will let you know that it's not a bed of roses. Even relationships, people will let you know that it's not a bed of roses. It takes a lot of compromise, it takes a lot of communication, and there's a lot of things that people need to work out, because most of these relationships is actually work in progress. All right. Thank you so much for joining me today. I am Mr. Nemhard. And if you haven't done so as yet, please go ahead and click the like, the comment, and the subscribe so you can know when I am posting new content. You can be one of the first to be notified. That is, if you have found value in my content. I will try to make it, I'm trying to make it even better for my audience, right? I'm trying to do some things, improve 1% daily. That is my goal. Improves on something by 1% every day. That is my goal for 2022. And also, my goal for 2022 is to have 500 subscribers. 500 subscribers. That is my goal for my YouTube channel for 2022. With that being said, thank you so much for joining. I was expecting this live to last for 1 hour, but based on the amount of information that is being shared, I have gone over an hour and a half. I have another forum to jump right into. So thank you so much for joining, guys. Look out next week, Sunday, for more marriage and relationships. Thank you, thank you, thank you.